Welcome, everyone, to the Financial Markets Weekly Recap Show that Steve and I do every Friday afternoon, usually a little bit earlier, but now I sense that football season is starting to interfere a little bit, Steve, and baseball season, and they're all together. But anyway, welcome to the show. How's your week been going?
Yeah, doing well. A little later today because I was doing some baseball content, like you said, but football is right around the corner, and yeah, I'll be really busy at WagerTalk.com. Some good videos there. The one we did earlier today, actually, you'll like, John. It's a technical video with all back testing with Ralph Michaels and his son Jeff Michaels, and we looked at how teams do after they sweep a doubleheader, they lose as a home favorite, and then the one that's really been fantastic is his son Jeff had a chart on first home game back after an extended road trip, and that is some really good data from a couple months ago. So we revisited that. And as you'll know from a back test in the financial markets, it's done very well out of sample the last 2 months since he revealed that on May 25th. It's actually done even better. And so we took the reverse premise. What happens when a team goes on the road for the first time after an extended homestand? And we factor in with rest or without. So I don't want to tease it too much, but check out that video on Wager Talk TV. There's some very profitable angles in both scenarios. And I told him on the video, I said, just like the financial markets, you want to have a basic premise, right? It has to kind of make sense. You should be able to explain it to a 7-year-old, and then you back test it. And what you want to see is it gets stronger. For example, on the extended road trip back home, it got better. If it was a 6-game, it got even stronger. If it had been a 9-game road trip, and that's what you want to see, right? It's the same thing with the financial market. You want to see a daily chart confirm a weekly chart and maybe a monthly chart, and kind of take a big picture approach.
Yeah, that kind of stuff also applies to the NFL teams too. If they play 2 or 3 games at home, college teams as well, and then they have to travel. There's some interesting trends with that. And then just thinking out loud with these trends, what I would do, and I used to do this with Ralph, is he'd have one on the Bet on It show, and then I would drill down deeper. So how do home teams do in their first home game back from a 7-game road trip in baseball that have a winning percentage on the road and are playing after the All-Star break? That's where I love to go with the basic premise then. And we always kid around about the p value. There's also another correlating tool I use called the Spearman coefficient, which is a correlating tool. It ranks how the parameters actually work together and whether it's meaningful or whether it's just coincidental that hit 70% winners over, say, 5 years. So that's all big stuff. But the ones you just mentioned, I know for a fact, are good, consistent, proven analytics that it takes away all the rest of the worry. You don't have to worry about who's on the mound. You don't have
Right.
to worry what the temperature of the stadium is. And these things, you trust them, and they have done well over time.
Well,
I
there's
had
two correlations right there, like the markets I want to bring up, though. First of all, we're talking about momentum. I'm a big momentum guy with the markets, both hot and cold. It's the same thing with sports. I've done that more recently in baseball. I'm a big believer in offensive momentum, and you and I have coached for several years over the years, and you know that hitters run hot and cold, and it's self-fulfilling prophecy. When you're in a slump in baseball, you start adjusting, you're overthinking. So I really believe in momentum. So that's another reason, like, hot or cold is something that's good to research. Same with the markets. And then also you just talking about, quality as well. And, whether it's a quality stock or a quality team, a Class A team or an Apple versus, some team that's going to go, company that's going to go bankrupt. But there's so many correlations, whether it be momentum, Class A shares or Class A teams. And also, you want to have, it's got to make sense. It can't just be a random short-term sample. So that's why I love the
right.
analogy between sports and the financial markets, like we talk about.
It's exactly right. And speaking of that, this is the S&P 500 today. We had some negative news, and on the YouTube menu, I put definition of what an engulfing candle is, and I thought it'd be good for our viewers to start understanding and learning what the basic candlestick patterns are and what they mean, and how you take advantage of them. Then, so you can see yesterday we did have a rather large negative bearish engulfing candle, and what it is you make a new high, as you can see, 4634.5. And this is basis September futures. And then all of a sudden, the news of the FOMC comes out, and lo and behold, we go down pretty hard. High to low there is roughly 750 to 800 points. So not a huge move by our standards today, but you can see that that has engulfed the whole previous candle plus the previous two behind that. And actually, it's four, five, six candles that engulfed prior to yesterday. So that adds to the bearishness that that signal would have. It doesn't mean it's going to work every time. Just like we were talking with the sports bets and the systems, they don't always win. But this rally today is based on the inflation gauge that the Fed absolutely loves to track, and they constantly in the media with it. And the the economists were expecting 4.2%, I believe it was, and it came out at 3.0. So what it's telling me, Steve, is that a soft landing is not a question of whether it's going to happen or not. It's actually underway, and that's why you see the green candle today with the arrow there, which is giving us a bullish candle. So this news may have eliminated the bearish engulfing candle and made it unvalid. So that's how I think it's a perfect example of how you have to adjust your thinking almost on a day-to-day basis about baseball teams, football teams, and the S&P 500, Apple Computer, whatever you're looking at, and let the picture tell you the story. Don't you tell the picture the story, because that's going to lose money. But it'll be interesting to see how this trades on Monday. And if we do take out that high at 4634.5, this thing could go, another 300 points, which would be 2,000 Dow points. So I'm holding off doing any like option, especially bearish option strategies, until we see what happens the early part of next week. What's
Yeah,
your take on it?
well, I was gonna say if you could pull that back a little further, um, if this past year's chart, the one you have there is just a straight line up. Obviously, the momentum is up, but we also talk about support and resistance. If you go back a little bit further, right now, on the cash market at least, we're right at like 45.82, right near 4,600. Let's say the last time it was this high, you have to go all the way back to basically the last day of 2021. Right at the end of 2021, it was at 4,700, and it was straight down all of 2022, of course, from there. So this is kind of retesting a couple of those recent highs from the end of the year, a year and a half ago. So it's a critical support resistance level. And that doesn't necessarily, now, yesterday, obviously, it bounced off of that and came down hard. You would say, well, that's a ceiling. But it looks like it's going to try to retest it again after today on Friday. So I think you're right. Next week is going to be critical. It might be only the last day of July, first week of August, but it's going to be a critical week, I think, because if we get a breakout and it holds for that entire week, closes above that 4,600 level, and it stays there the following week of August, that would become the new floor. So I really think we're at a pivotal point right now in the S&P, and I don't have an opinion which way it's going to go. I'm going to let the price action dictate it.
Yeah, absolutely. What's amazing with this, and it should be a case study at the Harvard Business Schools and Wharton School down in Penn, in my opinion, because when the Fed first began to tighten aggressively, we can see the low was really bad times there, 3491.58, because the world was made to believe that the Fed was way behind the eight ball and inflation was going to be a major problem. And you can see the engulfing candle right here. That marked a big time low. So at basically 3,500, we have this huge bullish engulfing candle, much like we had the bearish one yesterday. 3,500 all the way up to what did I say? 4,600. So that is what is that? That's 1,100. So that's like a 33% gain
Right.
in stock values while the Fed's tightening. So it's proof positive that when you hear somebody say, "Oh, stocks won't do good because interest rates are going up," it's a bunch of malarkey. I mean, it really, really is a bunch of malarkey.
Well, yeah, I would say right away, well, let's get back to sports and Wager Talk TV. I do the fade the public, NFL fade the public, right? The contrarian view. I love to do that. Same thing with the financial markets. And the NFL is the most bet market in all of sports. The S&P 500 is the NFL of the financial markets. So it's such a great analogy. And whenever everyone is saying something or it seems too obvious, you're going to make a lot of money, whether it's be betting the NFL or trading the S&P, by just kind of doing the opposite long term. So not a surprise, but it's counterintuitive. And if it was easy, everybody would be doing it, right? If it felt right, everybody would be
It's
making that trade, and they don't. And that's the reason it works.
Yeah, you got to have a plan and you got to stay disciplined to it. And if it doesn't work, you get out because you can get in again the next day. You don't have to put yourself stuck to a position or stuck to a futures bet for a team to win a World Series either. But this is your favorite market of late, I would say, natural gas.
Right.
And I think last week we said anything under 240, I believe you said would represent a pretty good buying zone, if I'm right. That longer term, this is going to start trending higher because the base here is so big and strong. It's multiple months and it's in a tight range, and ranges eventually get broken. So, you still thinking the same thing this week?
Yeah, I'm purely a technical trader, a momentum guy, a trend follower, and I just, I don't necessarily know when it's going to break out, but I think the risk reward to play a breakout is so much better than playing it the other way around because unlike a stock, natural gas is not going to zero. It just if it does something, we got much bigger problems. That means the world's probably ending or something. But it's a commodity that's needed, and it's really strange with the Ukraine war going on and everything that it's plummeted down. But the reason it has is because it went up so fast, and then it came down so fast. And as is often the case, it's in a consolidation period. But I just don't see it dropping much lower. I just don't see I could possibly go below two. And if it does, it does. And that's like you said, you have a stop loss, right? So if we're wrong on that
Right.
premise, minimal risk. But hey, look, this thing was at 10, like within the past year, right? So
Yep.
that's a 5-to-1 return risk to reward, a realistic 5-to-1, because we've seen it happen. So I still think you don't have to try to time it, just wait for a breakout. But when it breaks out one of those key ceilings, which I think it will, and you can see the trend action right there, it's making higher highs and not breaking through the lower lows, even though it's been going up and down. It's kind of a steady little bit of a climb up, and that's exactly what you want to see. I really think, honestly, you could get in at any point. Like I said, the last couple weeks, normally I don't take a buy and hold with natural gas, but I think you probably can hold on to this. You'll be much better off in the next year or two.
I think so too. And here's crude oil quickly. Nothing real new here. Short term trend is up, but I don't think it's really sustainable. It seems to be like a range between 80, very low 80s, and then the bottom, obviously, is just a little bit below 70. And we're kind of stuck in that range. And it is the peak of the travel season. And, it makes the chart makes sense to me. And I think it'll correct, but it's not worth doing any type of short trade.
Look at
Um,
that low, though, John, that 63 that you've got highlighted there. I mean, that was,
yep,
I mean, I don't know what you'd call that. It's like a hard hammer doji almost. I mean, that's an
it is. It is
extreme.
exactly that.
Yeah, but I mean, that's like an extreme three-time hammer doji. I mean, it's like that was the capitulation. And if you
Yep.
look to the left, go over about one column to the left, you see another hard green line down about a month earlier there, right there. Yeah. And
Yep.
it went up after that. I mean,
And
this
that
stuff
that that
works.
was
And
a
it's not
hammer.
because it's magic, it works because every buyer has to have a seller and vice versa. It's a zero-sum game. So when you see it open and then spike that low and then close higher that day on that 63 low, that means there was no sellers left. So it's got nowhere to go but up. And what's interesting, it didn't really shoot up initially, but it has gone up recently, like you said, but it never really went lower than that day. And it never got near the
Yep.
day low, but it never really got lower near the open or close from that day for the next month or so. That's a solid floor. So right now I don't think there's any value with the upside, but if it gets back down near that level again, it'd be a great risk reward trade because there again, oil can only go so low. The cabal over in the Middle East there, OPEC, they keep it in a price range. And if it breaks through that, that's your stop loss. But otherwise, it's a great range bound trade. And you could have gotten in about 2 or 3 different times on that range over the last couple of months and made money. But I think this is like natural gas. It's like Bitcoin was. When you have an extreme drop like you had in oil during COVID and then an extreme rush up like you had the last couple of years, you actually don't make money either way. It's going to be in a consolidation.
Speaking of Bitcoin, there it is with the Fibonacci lines on it. Those are the retracements. We can talk about how they're calculated, but it's a famous number series: 1, 2, 3, 5, 8, 13, 21, 34, etc. And what I'm doing is I'm adding the two previous numbers
Right.
together. So 1 plus 2 equals 3, 3 plus 2 equals 5, 5 plus 3 equals 8, so on and so forth. And then you take ratios of that pattern and you come up with the most common retracement is 38.2%. So in a bull market, you would expect no more than a 38.2% retracement of the entire move. Not that the market corrected by 38%, just that of that move, 38.2% lower becomes now a very significant support zone. And a lot of times when it's a real strong bull market, you don't even get close to it. You might back off, one of the smaller retracement numbers, and then before you know, you're at new highs again. But I think Bitcoin here, I wouldn't buy it, and I don't think you and I have actually ever actually recommended buying it. We did on our show successfully catch both shorts from 60,000, and that was pretty nice to be able to do. Um, but I think this is going to squeeze up through that 32,000 area between now and year end. I don't know what's going to cause that, but the market feels bullish. And maybe if the stock market goes sideways instead of higher, people will reallocate some funds to Bitcoin, and that might be enough to get it moving. But the chart looks half decent here. What
Well,
do you
no,
think?
if you, I mean, honestly, you glance at that right now, you'd have to say it's an uptrend, right? I mean, the
Yep.
lower left to the higher right, and that's like oil earlier. Oil was still a downtrend if you glance at that overall big picture, but this is an uptrend, and 20 was great support. I mean, you and I knew it. We talked about that as well. That was the initial breakout back in 2021, over 2 years ago. It was the all-time high the day the CME started Bitcoin futures back in like 2016, whenever it was.
Yep.
It closed like the next day at 20,000 and never touched it again until like 5 years later when it broke out through there and was off to the races. So once again, if people don't think support and resistance and breakouts work, they're fooling themselves, because it makes sense. Once again, you can back it up with logic because there's buyers and there's sellers. There's break even points. People like to break even. They don't want to take a loss or vice versa. But anyway, it gets up to 60,000 or whatever. It was overrun. I mean, that's like a 300% increase. And you and I both knew there was some good downside reward, and that's what happened. But the problem with Bitcoin is that it's still the wild, wild west, which means it trades like that as well. And if you look at these, even on a daily chart, it's like if you don't get in on the right day, you miss a 10% move. Like, look at those green ups over the two different panels there.
Massive.
It's like even if you're a weekly trader, you're going to probably get in at a bad price. And I've researched this the last couple of years. The people are looking at what we're looking at, and like a lot of times when you get that breakout, if you've done a weekly chart, you're getting thousands of dollars higher on that Monday morning or whatever, because it also, it's a cash market. It trades over the weekend when the futures exchange is closed. So you're talking about a 2-day gap there. So it's tricky. And even with a disciplined stop loss, you're going to take some hits sometimes just because it's going to drop right through it before you can get out. But 20,000 was the initial breakout. And when it came back down, it hit like 16, 17 briefly. And then it got above 20, and now it's off to the races. And by the way, 30 is a pretty key level as well. If I'm not mistaken, June of 22, over a year ago now, that hard drop to 20 broke through 30 over the weekend, and it was off to the races down to 20 within a couple of days. So if it can hold 30, John, and like close above that for a week or two, the risk reward, kind of like natural gas, in my opinion, would be a great trade here. You make 30 or 29 your stop loss
Yep.
and see if you can get back to 60 or 70. Who knows? You never know what could happen with the upside.
I just while you were talking, I just did this visually, and this is still Bitcoin, but I narrowed down the number of days. And from the high of 32 to where this rally started, roughly at 24,700, is roughly call it 7,500. If you take 38.2% of that number, if I had the Fibonacci numbers here, it would come in right here.
Yeah.
So it's actually held, and this I would consider that's a major bullish pattern right here.
And the other thing about Fibonacci, real quick, people think, oh, it's voodoo, it's magic or whatever. First of all, it's found in nature, like flower petals. There's a lot of
That's
like
right.
designs that have it. It's really fascinating. But it doesn't even matter if it works or not, because enough people are looking at it like you are right now in the charts, and it's in the charting software, that you can also make an argument it becomes a self-fulfilling prophecy. So it doesn't matter if it really works or not, because people are trading on it. And once again, it's a zero-sum game. And if people are going to start buying off the Fibonacci retracement, that means the price is going to go higher and you're going to get a bounce. So it really becomes a self-fulfilling prophecy, whether you believe in it or not, as a trading indicator.
Very true. I typed it in wrong there. Here. Want to
By the
look
way,
at
the other
two.
reason I think 20,000 is that long-term resist or support level, even though it dipped below it a little bit, is because there are institutional buyers and banks and stuff that have it. It is like gold in that way that it's a reserve for a lot of people. So I know it theoretically could go to zero since it's a cryptocurrency, but I think Bitcoin is established enough now where 20,000 looks like that long-term support level where it's not just traders anymore. And that's where it broke out of initially as well, as I mentioned. So, even if you get in now, your stop loss is 10 or 12,000, where your upside could be to 70 or 100,000 again.
Yep, I agree. Transitioning over to the 10-year note here, and then we'll do some final thoughts and call it a week. This is a 10-year note. So as prices are going down, yields are going up. It's an inverse relationship. Fed started tightening. We obviously have a high of 132 in the 10-year note, and it went all the way down to 113 in rapid fashion. Now, the yield value of a basis point, for example, is monumentally bigger than what you would think with a stock that went from 132 to 113. This in bond land, everybody thinks bonds are boring. Well, they're not. You can make tons and tons of money trading the 10-year note and 30-year bonds, and just take my word for it because I've done it. But the um, the price action here was just a complete selling frenzy. Then the Fed makes that one big move. I guess it was the third one, and we made the low 113. Now the Fed has tightened 3 or 4 or 5 times since then. We haven't made a new low. I
Right.
started thinking over here last week that we might be a little bit in trouble. Well, we're at 116 on the 10-year note right now. Actually, 117, a 64th of a point from 117, which is significantly above 113. So, like in stock land, that would be the difference between a stock trading at 140 and the low was 110. You say, well, it's unlikely that the low is going to be taken out. That's how amazing this chart is. And again, it ties into the tremendous bull move we've seen in stocks this year in the face of Fed tightening. And that's the lesson to be learned, that just because interest rates are going up, no matter how fast they're going up, doesn't mean that the market should be avoided. And people that did liquidate are really wishing they hadn't done that. I'm sure.
Well, it's also an example of why you need to be more diversified than just the standard 60-40 portfolio. Because last year in 2022 was the worst in history, I think. It was definitely one of the three worst, but it was also like one of the only 3 times in history or something where stocks and bonds moved that way, because bonds are supposed to be
Right.
uncorrelated to stocks. So that's a lesson in itself, but also everyone puked like 20% out of their S&P holdings last year, and now it's done pretty well this year. And like we showed on that first chart of the show, it's been up all year. This looks like this is very similar to what we talked about with natural gas, Bitcoin, oil. For 20, 30 years, bonds were all the way down to 0% eventually, which means this chart was going up long term. And then all of a sudden, the Fed instantly, historically, tightens faster than ever. You see on the left side there how fast it dropped, which means rates, as you said, were going up in inverse. So once again, just like natural gas, up and then down on the chart here, you're going to get a consolidation period. I'm not a range-bound trader, but this has been one of the best range-bound trades you could ever see. And to be honest, it'll probably continue to work. Like you said, it never took out that low on the left there, but it's come close a couple times. But look at those last two recent lows. They're almost identical to each other. And then look what they've done right after that. They've shot up green both times, like two straight hard greens up, which once again, you can't wait. You gotta be balls, you gotta get in. But you have your stop loss right below that. So you've got so little risk with the reward up. But then the vice versa of it. Look at all those little green arrows you got there. All those peaks that it's had have been pretty consistent, and it's gone down red hard, like several days of red right after that.
Yeah, right
So,
in here
maybe
too.
maybe it won't work anymore going forward, but I'd be willing to bet that you could buy off these bottoms and sell off these tops, this range bound trade, because markets that go up and down as fast as this did normally go range bound, and it's worked like a textbook. And like you said earlier, John, bonds might be boring, but you can trade them and make a lot of money. This is a great time, I think, to be trading them, which means you get in, you get out, you have stop losses. And at worst, you lose a little bit on that stop loss. If not, you keep catching these ranges. They're called channels. With that said, though, if it was to break out of the channel one way or the other, then we could be off to the races again. But in the and everyone knows the Fed's kind of slowing down. That's another reason this is likely to remain range bound. It's almost too obvious, which scares me.
Yeah, that's always a concern. But I guess to finalize the show, we started with the engulfing candle, and look over there where the high was made, 132.21.
Yep.
There it is. And the news is never going to say on CNBC, "Hey, we had an engulfing candle today. Look out below." It's just one tool. I get it, but when these patterns happen, like we started with the sports betting, a team that's on the road for 7 days and or 7 games, then comes back home. Sometimes I believe, Steve, they don't do so well over time because there's such an adjustment in getting home and home life and all that stuff that, especially in the NFL, teams are not likely to do well. I think is what the trade was there. But when you see these things, it's telling you the story. You don't need to really be watching TV actually to see what it's saying. If only the weather forecasts were this predictable.
Well, plus, and the other thing to keep in mind is it doesn't matter what the story is. All that matters is the price. You could be right all the way to the
Yeah.
poorhouse. What's the old saying? You could be right until the stock goes to zero. I mean, it's just, I think one of the best ones, it might have been Buffett that said this one, was that the markets can stay irrational longer than you can stay liquid. And that's why,
Yep.
people that get it, that's why the whole like dollar averaging, cost averaging makes sense in some regards, like long term, I get that. But because you like the stock and then it goes down 80%, it doesn't mean there's more value now. It means you're freaking wrong. And people just don't realize that. Price action is the great truth. And once again, the only truth in the financial markets is the price. And, you got to put your egos aside. And you and I, as technical traders, do that. Like, we have no ego when we're looking at the markets. We just look at the reality of it.
That's true. My early career trading, ego was removed at the front door
Right.
real quick, or you weren't employed very long. Is the best lesson in the world is getting your. I mean, I hate to say this way, is getting your
No, we've
face ripped off,
we've
thinking
talked
that
about
you.
that. Yeah, early on with sports betting or
Yep.
or investing, the worst thing that can happen is you hit that 18 parlay on your first bet ever. Because all that money you maybe made on that lucky win, you're going to lose that and then some when and then when you finally give it back, you're going to keep betting it because you'll be like, well, I won it the first time. So it's first impressions, right? They're a powerful thing in all of life. And plus, you can afford to lose more when you're young because your bankroll is like 1/10 the size of when you become experienced. So you build that
That's true
bankroll with
too.
luck, then you start betting more, and you're going to end up losing more because it was all luck, and the luck's going to turn at some point. So yeah, I thoroughly agree with you. And we talked about that, I think, last week about paper trading is great, but I know for me, and I think you also, you got to have a little bit of skin in the game to take it serious. So I'm a big proponent about using real money, but just very small, just enough so it hurts when you don't pay attention or you don't do things the right way, just enough so it hurts.
Yep, I agree. So, your final thoughts here? Any big plays going this weekend tonight? Any thing you want to say about Wager Talk? What you got going there? This floor is yours.
Yeah, just check out Wager Talk TV. Did a baseball video earlier for this weekend with Ralph and Jeff Michaels, and anybody who's watching this video would love it because it's all technical based baseball handicap, and we don't even talk. We don't even mention the word starting pitcher on the whole video. I don't think, and that's how the odds are set. So when you beat the betting markets or the financial markets, you want to think a little bit outside the box, right? So the betting odds in baseball are all based on the starting pitchers. So we're digging a little deeper with situational handicapping and some fascinating stuff. It's all back tested with real data and charts. So I think all the financial viewers here will love that baseball video we have right now at Wager Talk TV on YouTube.
I think it'll be great too. I think I'll be watching that before I do my next show at 8 o'clock tonight with Rudy Reyes, good pal of Ron Jaworski.
Ooh, number 7.
So one of these days, I guess Jaws will have some time, maybe if he's not playing golf, then to pop in on the show. So that'll be pretty fun.
I've got my
But
Kelly
we'll,
Green. This could have been the jersey for Ron Jaworski, the color I'm wearing today.
yep, that's
They
Eagle
went too
Green, boy.
dark for my taste, man. I love the Kelly Green.
But I'll tell you the one thing: the Mets fans today on social media, it's Mets red. I mean, it's their anger is so great. I can't even. Sometimes you just gotta like let the season go. They're not going to, even if they make the playoffs. Where are they going to go?
I agree.
They're not going to beat the
The
Braves.
Yankees also. We've talked about the Yankees. Same thing. Both New
Yep.
York teams vastly overrated. Hey, and look, that's like an overrated stock, right? Once again, New York teams fade them. You can make money doing that in sports because they're public teams, just like public stocks are. And the two New York teams are definitely overrated coming in, and they've been exposed this year.
Yeah, big series for the Yankees and the Orioles, especially the
Yeah.
Orioles because they're the best record team in American League. They got 3-game series with the Yankees starting tonight in Camden Yards. You know that place is going to be rocking because the Orioles, with the exception of a couple years, have kind of been the Yankees' doormat, and now it looks like it's changing the other way. So it's that old saying, the dog and the fire hydrant. And I think the Yankees now have are starting to become the fire hydrant and the Orioles the dogs. But I like the over in that game for what it's worth. That's a little premium bet for anybody that's going to take advantage of it. I think that game is going to score a lot of runs.
I'll tell you right now, you have not made money fading the Orioles the last couple of years. They're the most profitable money line team in baseball, and it's because everyone keeps thinking they're not for real. They're now 22 games above 500, and I believe, John, they have the best record against winning opponents in all of the American League this year. So they are for real. The Yankees have actually been decent against winning opponents too, but they've been, with Judge, without Judge has been the difference for that team.
Yeah, one guy does make a difference on the Yankees. It usually doesn't matter that much, but with him, it's huge.
Yeah,
Um,
it just shows how great he is, right? Wins above replacement probably should be multiplied with him because the month of June they were the worst offensive team in all of baseball when he was out of the lineup, even worse than the
yep.
A's and the Royals. So he's pretty amazing.
And last, I did a kind of a thesis on the Cy Young Award using Bill James's metric, and of course, as I said earlier, I'd like to tweak things to bring it more correlated, if you will, with all the tech, the tools that we've had. And some of these equations have been around since the 1950s and even earlier. So they're part of machine learning. It doesn't mean that machine learning is this brand new thing. It's not. But anyway, the Cy Young points metric that Bill James developed a long time ago, and again, I tweaked it with all due respect to him. It's pointing towards Bautista to win the American League Cy Young as of right now. Guy is striking out 65% of the batters he's faced
Wow.
as a closer. We haven't had a closer win the award since 2003 when Eric Gagne won it for the Dodgers with 55 saves. And, 85 to 1, Steve, I kind of like that for a pizza because that, would buy Tony Finn and Rob Vino and myself a lot of pizza.
Yeah, and I
But
think,
that's what it's pointing to.
well, I think for a reliever to win, I'd have to check, but were the Twins, they had to have been in playoff contention that year, I would think, right? So, I mean, it's got to be a playoff contending team for a reliever to win it, I think.
Yeah, part of the equation is that if the team finishes in first place, there's a bonus of 12 points awarded to the pitcher that's on that team
Yeah,
that's
that
in
makes sense.
contention.
Yeah.
So that's actually a pretty big percentage of the total. It's like about 18% of it. So first place teams are huge, and then that's why I like Strider from the Braves because they're obviously going to win the division, get the 12 points.
Yeah, I'm gonna give you a shout out on some shows next week if we're talking baseball futures. I will give you a shout out with that one because that's not something I'd cross my path, but that 65% strikeout thing is just insane. That ratio.
He has 96 strikeouts, which is almost as much as some starters that are contenders for the Cy Young Award.
Yeah, I think that and once again 85 to 1, you can always, just risk so little. They're getting risk reward, right? That's what we talk about every show is
Yep.
risk reward. That's just a small sprinkle. It's worth the risk reward is good.
And it's mainly 50 to 1 now across the board, but it moved since Monday. But
Yeah.
still 50 to 1, I'm signing up for it when the guy is this good and the metrics say from Bill James, credible resource, right?
Well, here's the other
Stands
thing
to
I'll say
reason
too,
it'll be
John,
fun to
is
do.
it's also about the competition, right? There's no like I can't think of like a true shutdown, lockdown pitcher this year in the American League as starters go. Um, and with the rule changes and stuff this year, there's more offense, the pitch clock, less pickoff moves. I think it's made it very difficult for starters as well. And I mean, who started the All Star game for the American League was Cole, I believe, from the Yankees, right?
Yep.
And he's decent. He's not having like a Cy Young season, in my opinion. So I think that's maybe the best part of this whole bet is that you don't have some like lockdown ace like Randy Johnson or Pedro Martinez in their prime as a starter. So I think that opens the door for a reliever because first of all, no one's going to run away with it. And second of all, most people vote for starters still. They're going to split the votes among several starters, whereas a lot of people might still vote for a reliever that's doing that well. Yeah, I think that could happen, man. And we're going to definitely promote the heck out of this segment when it does, because 50 to 1, 80 to 1, you got to get some props for that if it happens.
Yeah, I appreciate the shout out, Steve, as always. McClanahan and the guy at Houston, Farmer,
Valdez.
yep,
Yeah.
have been getting hammered. And
Yeah.
that makes me
Valdez had a
even more
couple bad
bullish that
outings.
we
Yeah.
could have a, yeah, I mean, that just makes the bet even better at even at 40 to 1. I'll take Bautista at 25 to 1. And, he only pitches one inning. He's obviously not tired yet. And we only have 60 games to go.
Yeah, it's a good point. Like, no one's having a great enough season where even if they pitch lights out for 3 months, they're going to run away from everyone. But any of these guys have a few more bad starts, they're going to be out of the mix, whereas Bautista really isn't likely to do that. Otani could end up being in the mix as well, just because, there's so much hoopla. I think voters would love to give him an MVP or Cy Young whenever possible, if not in the same season, would just be insane. But he's had a couple rough starts mixed in after a really strong April and early May. He went downhill a little bit. Um, when I checked at the All-Star break, Otani had the lowest opponent's batting average in baseball, which is a great stat, but his ERA was still like 3 something. So I think that's going to make it hard for him to win unless everybody else kind of falls apart also.
I believe in my research, it was 7 award winners have had an ERA over 3.
Yeah.
Actually, I think it's
Did
11,
Otani
Steve.
pop on your research, like top 5, top 10
No,
as not even top 10, like probably? Okay.
no. And the
That's
reason why
interesting.
was home runs allowed.
And that's what got to
Too
him
many
in
home
May.
runs.
Yeah, and that's when he had about 3 or 4 bad starts in mid-May. He gave up like 8 home runs over 4 games, and that was the thing I was trying to figure out, was it an anomaly or not. He still had like a 21 to 3 strikeout walk ratio during that span, but he has, and the thing that's funny about home runs nowadays in the launch angle is that it's like one bad pitch, right? You can have a great pitch or a great game still, but Otani does appear to give up a home run here or there a little bit more than average. And I think that's going to what does him in. So that's a good point.
Yeah, yeah. We'll have to see what happens with this, but I don't think Bautista's odds are going to go higher. So if you like our idea, that would be pretty good time to put some little bit of money on it.
Yeah, it's awesome. It's not been on my
Well,
radar, man. I appreciate it.
yeah, no problem. It's all about exchange of information, right?
Oh yeah, we get smarter on these shows. That's why I do them.
Yeah, you can't do this in a closet.
By the way, he's got a 0.92 ERA, I believe. It's pretty damn impressive, and a 0.86 WHIP. I bet you there's not. Do this, John. Steve, I bet there's not a Cy Young history winner that had numbers that good. ERA below 1 and a WHIP below 1 ever. Because Bob Gibson
I
had like the lowest ERA ever, is like 1 point something, 1.69 when he won it in the 70s, as a starter. And I
yeah,
know relievers have lower WHIPs and ERAs, but I bet there's never been a reliever he's got 28 saves. So how many games he's pitched? Probably 40, 50 games already. I mean,
yeah. In
those are,
2003, Gagne
yeah, what were
had a
his numbers?
WAR of
That'd be a good comparison.
3.7. He actually had a losing record of 2-3, ERA of 120, 82 innings pitched, 137 strikeouts. Unfortunately, I
Wow.
don't have the WHIP on this data, but I can come up with it for next show. That's for sure. Or I'll send it over to you. For the shows you're on.
Yeah, no, and I'll pull it up because you've got me researching this now because Batista's numbers are just off the chart great. So,
Dennis Eckersley, 1992, was the second to last closer to win it. 1.91 ERA, 93 strikeouts over 80 innings, so nowhere close to what Batista's doing. Mark Davis, 1989, San Diego Padres, 92 strikeouts, 92 innings pitched, 185 ERA. The next two, Steve Bedrosian of the Phillies, 1987, 283 ERA. Bruce Suter,
I remember him.
Chicago
Cardinals.
Cubs,
Oh, the
19,
Cubs. Okay. He
or
was
he was with the
Cardinals and
Cubs
Cubs.
then.
Yeah, he was both. Yeah.
79, 222 ERA, only 110 strikeouts and 101 innings. Willie Hernandez, Detroit, 1984. Get this, 112 strikeouts and 140 innings pitched for a closer. Oh, goodness gracious. But that is yeah, you're right. There's nobody under 1 at all on the list, period.
Well, and there again, it's a public thing, right? These future bets are based on action coming in. And sharp bettors like you and me might see the value with that, but nobody, Joe Public, is betting him. It's only his second year in the league. I mean, last year was his rookie year. He pitched in
Yep.
65 games for the Orioles last year. He had only 65 innings. This guy in his career has only thrown 114 innings. So it's like he's just not known. And that's another reason why the Orioles remain the best moneymaker in sports the last 2 years, because they've got a
Absolutely.
bullpen. So it's great stuff. Love talking baseball with. I love financial stuff, but
1981.
baseball too.
Tony Finn would love this stuff because he actually knows these people personally.
Right.
But Brawley Fingers, American League, Milwaukee, was 6-3 with 28 saves in 1981. 1.04 ERA is the all-time low for any award winner of the Cy Young.
Yeah. And
And then
Bautista's at
Gibson,
0.92
112.
right now.
It's
Yeah.
amazing.
He had a 2.19 last year, and his career is now 1.65. But obviously, he's pitching even better than last year. And yeah, I can't believe the odds are that high. If you were to have this discussion right now, you'd be like, yeah, this guy can win it. He's probably like 5-1 or something, right? You know what I mean? So that yeah, there's no arguable. There's definitely value. Whether it wins or not, there's tremendous value there.
Yeah, talk about flying under the radar.
Oh yeah, and that's why it works. It's
Yep.
because there's not a lot of buyers, right? It's the same reason a stock or commodity is underpriced, because there's not enough buyers. It's a supply and demand thing. The markets are the ultimate because it's zero sum, but this comes pretty close as well.
Yeah. Great stuff. Well, I'll let you get going, Steve. I know you're probably getting hungry for dinner here.
Ha! Sounds
And then
good.
get back to the grindstone. But we'll be back again next Friday with another edition of the Financial Futures and Sports Betting Recap of the Week. I think we'll have to rename it because it's recapping the week of sports betting and financial and showing you the similarities between the two.
I
So
like
until
it.
next week, we thank you for watching. Steve, thank you for your time. Always remember, bet with your heads and invest with your heads. Never over it. And may all the wins be yours.